Hi, everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's quickly get to the charts. Let's take a look at the S&P and see what's going on in the markets. We are kind of slowing down a little bit. As you notice, we are in the upper end of this continuing consolidating upward pennant pattern, you want to call it that. I keep getting asked the question, is there still the potential that this is an ending diagonal? And there is. At some point, we have to have a wave 4 because one of the rules of an ending diagonal is you have to be in a wave 5. We were in a wave 5 and then relabeled to the 3, which means that this pennant pattern is going to extend a little bit. I feel like it's likely, based on the way things are going, we continue to the upside in through the end of the year. And then when we get into January, maybe we're having a little bit of a buy the rumor, sell the news event here with the election. Everybody excited about a pro-growth administration, et cetera. But things don't go straight up forever. We're not going straight up. We're actually moving in a pretty nice 45-degree angle, but we still will have a corrective move at some point, and I think this could play out really well. We get a little bit of a correction down towards the bottom end of this ascending pennant pattern, and then we have our wave 5 extension right up to that C wave, 100%. Above the 610 level. We're getting awfully close to 610 in today's trade. And by the way, we're recording this just before the market closes on Friday, so prices could change slightly into the close, but I think they'll be likely pretty close. And then the only question in my mind is, does the wave 3 continue to the C wave extension in the zigzag before pulling back into the wave 4? Or do we pull back in the wave 4 first and then extend up to that 100% level and potentially just a little bit higher than that, but I don't think too much. I know there's some pretty wild forecasts out there about where the market could go. I think we're getting a little bit extreme. You're hearing the whole animal spirits thing going on. I'll talk about sentiment in just a moment, but let's go to the bond market real quick. And if we take a look at TLT, you can see that prices are continuing to go up, which means yields are coming down. Quite interesting, except for the fact that we are following along with Elliott Wave zigzag rules to a T here on TLT. Get it? I'm sorry, I'd throw that in on a Friday. But we had this downward zigzag pattern where we had a 38.2% B wave correction. That yields a 61.8% extension. Then if you're going to have a further extension of the C wave, you go down to the next fib level, which is 100%, which is exactly where we went. And then when the zigzag is complete, you retrace the C wave. That's the rules. That's how Elliott Wave on these zigzag patterns, my favorite directional pattern. I know technically a zigzag is a corrective pattern along with flats and triangles, but they're directional in nature, and that's the way I like to trade them. And you can see we're continuing up here. We have pulled down a little bit from where we were earlier in prices, but it seems that we are destined to retrace that C wave. Then I think we have to take a look at where we are. We did have some economic news that came out on this Friday. The big non-farm payrolls report that everybody was looking for came out, and in general terms, most of the economic pundits are saying it's okay. It's kind of in the sweet spot. We did have a tick up in unemployment, but here's something that I think is starting to get really interesting that we need to talk about, and that's consumer sentiment. And consumer sentiment is moving to the upside, as you can see, highest level in a number of months, but to my surprise, as bullish as the sentiment seems to be, we still aren't at extreme levels of bullishness. We're getting up there, but we're not quite there yet, which means there is a potential to move a little bit higher. I watch consumer sentiment when it gets to extreme levels. I don't pay much attention to it anywhere in between because it doesn't really matter. But when sentiment gets to an extreme level, whether it's bullish or bearish, the market tends to go the other way. When everybody views the market one way, the market tends to go the opposite way because that's the path of least resistance. And I was a bit surprised to find out we're not quite that high yet. So it does bode for the opportunity for the markets to go higher. Let's take a look at the VIX before we look at the rest of the U.S. markets. And you can see on the VIX pretty much what we talked about last week, a high likelihood that we're going to move down towards this 12.5 level, the same level that we pegged back here in the spring before we got into Yen Monday and we added a little bit of volatility to the market. We moved down here towards the 12.5 level, and I think that's exactly what you could see going into the end of the year. That's the norm, where we have the never short a dull market, where we go into this period of time where some of the investment managers, they're done. They hit the benchmark, they've reached their bonuses, and they don't even trade anymore. That's part of the reason that volume dries up this time of year. And then you get the holiday week between Christmas and New Year's, known as the Santa Claus rally, where nobody's trading. That tends to drift up as well. So I think you could see us just kind of hover around this 12.5 level, barring something crazy, unforeseen, a black swan type event. The market shook off the fiber optic cables that got cut in the transatlantic cables. We just seemed to blow that off. That didn't seem to be a big deal. There is some rumbling. There was some news this morning about the amount of stockpile that Iran is doing as far as uranium, et cetera. So, there's always something out there that could explode and blow up. Pun intended there, but nothing that the market seems concerned about now, even the potential for importing inflation. The market seems to be convinced that President-elect Trump, with all the extreme tariff talks, is just positioning, using his leverage, trying to get what he wants. And so far, he's been pretty successful doing that. Let's take a look at the Dow as we look at the other markets here in the U.S., just kind of in the middle. Now, this one isn't really an ascending pennant pattern. This is just a plain old basic channel, about as basic of technical analysis as you can get, moving to the upside here. And this wave 3 is pretty much in the middle of it. And there's that C wave extension there, getting up towards that 460 level. Doesn't look as ripe for a little bit of a correction as the S&P does. The Dow hasn't been performing quite as well as the S&P has lately, but right in the middle of that channel, seems like we want to go a little bit higher there as well. When we look at the Qs, this is the one, as I've talked about, has been most interesting. And with the tick up in prices, which I thought was a little bit odd, we are back into the Fed Fund futures predicting a 25 basis point rate cut in December. But there's been a lot of Fed speak where some of the Fed governors have said they're not opposed to pausing. I think it's going to be a close vote on whether or not we get the 25 basis points in December. But as long as prices go up and yields are kind of hovering in the lower end of where they've been for a while, that does add fuel to this continued move up in the Qs. But note that the Qs are in a wave 5, not in a wave 3 like the S&P and the Dow are. So I think you have to take that into account. We'll see once January comes whether or not these tariffs really come in. Are they going to import inflation? Is the Fed going to pause? Are they going to go in December? I think that could have, that's the one thing that could create a little bit of volatility in the month of December, is if the Fed doesn't cut. If they go with the 25 basis points, I think that's going to be well received. But if they surprise just a little bit, and it would be a little surprise since we're back pricing in the 25 basis point rate cut. We went from 100% certainty to a coin toss at 50%. Now we're back around 70+% that they are going to cut in December. But if they didn't, that could create some volatility. Other than that, I think we continue to creep higher. And if they do cut the 25 basis points, that could extend this wave 5 a little bit on the Qs, but with such a weak wave 4 pullback, and we only went to the 23.6% level. You've heard me talk about this before. I've read everything that Elliott has written, not just his main published books, etc., but notes and guidelines and observations that he made. And he acknowledged 23.6 because it's a fib level, and he was such a big believer in the Fibonacci levels for support and resistance in concert with Elliott Wave. But he didn't like this 23.6 because he said sometimes that shows up as more of a pullback than an actual correction, and that you could be continuing the original impulse move. So what I think might be a little bit interesting to watch is if the Fed does go 25 basis points in December, does this 5 relabel to a 3? I talked about this last week, that I wanted to see if we broke above this wave 3, would the wave 3 move over, or would we label the 5? Because at that point, the 4 was green. It wasn't by the algorithm confirming that this was going to continue higher. And by the way, while I'm talking about the algorithm, if you haven't gotten a copy of this software, I don't know what you're doing. Go to hub.com, HUBB.com, and get it for free. You get the free Elliott Wave counts. You get free live intraday counts on Elliott Wave. And if you're a shorter term trader, all the Elliott Wave stuff that we talk about in these recordings works no matter what the time frame. So if you're more of a day trading guy or someone that's shorter term, still works on the intraday charts. So take advantage of it. And then if you have any interest in the AI signals, there's a subscription opportunity I'll talk more about a little bit later on. But right now, we're a little bit separated from the 10-day moving average on the Qs, so maybe we take a little bit of a break here. We'll see. But if we were going to get one, it seems like today would have been the day with the economic news coming out. But everybody seems to think that, as I said, it's the Goldilocks scenario where it's pretty normal for where we are in the markets with where sentiment wants it to be for that Fed rate cut. Now, if we look at the IWM, that one's also sensitive to rates, and yet we're drifting down here, which is kind of surprising because with prices of bonds going up, yields coming down just a little bit, you would have thought that was a great opportunity for the IWM to go up. But I think this plays right into the rules that you hear me talk about so often. I don't like the gap up, and I don't like the gaps up with vertical moves. You get too far too fast, you get too far away from the 10-day moving average, and you're going to come back to that 10-day moving average. No security in any time frame gets too far from the 10-day moving average. You've heard me say that in ad nauseum. And so here we are. We came back, got a little bit below it, and then we went vertical again on the IWM. And so we're just backing off a little bit. So I think this is just traditional backing and filling here. But we could see a renewed move to the upside on the IWM, also in a wave 3, joining the SPY and the DIA in 3-wave zigzag patterns to the upside. And so we should move just a little bit above 250. So as a summary in the markets, I do think, barring any sort of an unforeseen black swan type event, the likelihood is that we do follow what normally happens this time of year, a little bit of a melt up scenario. We'll see how that plays out. Let's go to the metals and look at gold and silver. If we take a look at GLD, you'll be able to see that not a whole lot is going on here. I think we just have to wait and see what happens. I think that's what the gold market is doing. It just wants to wait and see what's going to happen with the election and what Trump's going to do with these potential tariffs. If we do have a lot of tariffs, that could import some inflation. That's going to be tough for the metals. If it is jawboning and if it is just positioning and leverage and the tariffs don't come in as high as what he's been talking, that could reunite a bid in the metals. I think that's likely. When you look at SLV, we had that little triangle in GLD, but you can see we're trying to bounce off this wave 4 on the SLV, pulling back a bit today. Again, a little surprising to me, but pulling back a little bit. We got back below that 50-day moving average. We tested it and we came back down. Now we do have a strong wave 4 right at that 61.8% fib level. To me, the strongest of all Fibonacci levels. So silver wants to try to make a run. It just can't get the momentum yet. But we can keep an eye on that. And it kind of ties in with GLD and the triangle. So I really think that that could be through the end of the year trading range for the metals till we figure out what's going to happen from there. Let's move to cryptos, which that's where the action has been. As you know, we did break above 100,000 the other night and couldn't hold it. So we came back down. Now we're back above. You can see we're back above 100,000 at the time of this recording. Can we close above 100,000 today? If we do, ooh, holy cow. Who knows where we go? We could be off to the races on Bitcoin, but we got to get that close above 100,000. Like I said, we traded above it and we didn't close above it, but we're trying again. And if we do, I think we easily go to 110, and then we'll have to see where things go from there. We talk about all things crypto over in the Hub Financial channel every week. If you haven't subscribed, go to Hub Financial here on YouTube, subscribe there, and you'll be notified when those videos are posted. So we talk a lot in-depth stuff on cryptos. Ethereum, following through with that, having a nice update today. Look at that. We're above 4,000 on Ethereum. It's continuing its move. We had talked about how it seemed like Ethereum may play some catch up. It hadn't followed along with Bitcoin's move, but it's catching up rather rapidly, especially with today's move. So pretty exciting stuff there. Solana's been backing off a little bit, so I thought I'd throw in just a couple other altcoins here that you might enjoy on the crypto part of things. Move up in Cardano. It's had a nice move. Just seemed to be left for dead around 35 cents till after the election, and then everything crypto has been moving there. But there's also been some rotation, and I think maybe a little money rotated out of Solana and has come into Cardano. And then another one that we talked about in this week's show is XRP, which also had a big move, trading down here under 50 cents and then went to almost $3. That's a heck of a move. So there's a lot of stuff going on in crypto. But I think you have to be real careful here. Bitcoin's king, but there's a lot of rotation going on in some of the altcoins. So you got to be nimble and quick. And so you want good information if you're interested in trading in that space. And while we're talking about the crypto world, you guys ask about this. And as a quick reminder, if you haven't been watching the past recordings, we are giving away one of our free level 3 subscriptions every month this year. It's December, so last month of the year. This is your last chance to get in the drawing. So all you have to do to register is leave a comment underneath this video and you're in the drawing. And the level 3 subscription includes our time-based strategy, which is stocks that are in a trading range. We do income-based strategies there, the volatility strategy, which I think is where all the action's going to be. Going to be putting on a lot of these triangle patterns moving into January, as I do think volatility will increase in January, and we're going to get some breakouts. And then the AI-based impulse strategy, which is those zigzags within the wave 3 that I talked to you about, my favorite directional strategy. All those combined, we sell for thousands of dollars on the website at evotrader.com, and you can get one for free in the drawing just by leaving a comment under this video. So good luck to everybody in the last month of the year. But looking at Coinbase, since you all asked about it, there was a comment that said, hey, with all these altcoins moving, et cetera, and the big moves in Bitcoin, do you think it'd be an interesting time for Coinbase? And yeah, I think that was a very good observation. We had this nice symmetrical triangle here in Coinbase, and we're breaking out, having a nice move today in Coinbase. And I think we go higher from here. We're getting awfully close to 350. I feel like the breakout of this triangle suggests 375, and then you have to ask, if we get to 375, are we really not going to go to 400? That's the old tractor beam effect. That's a nod to my dad. When I was growing up, Star Trek was always on the TV. He loved it, and they always talked about the tractor beam drawing things, and these big round numbers act that way. They just draw the security to them. So if we do make it to 375, which would suffice this breakout of the triangle, hard to imagine that we don't actually go to 400. So I'm in agreement. I think Coinbase is a good place to look, and good question that was asked there. And by the way, when I ask you to leave a comment, I read them all. I read every one of your comments. I answer as many as I can, time and travel permitted, but I read them all. So I appreciate you taking the time to write them, and know that I'm taking the time to read them. Let's take a look at Amazon real quick. Amazon was actually the case study consideration that we gave out in this week's TradeFinder. And TradeFinder is a webinar that we do every Tuesday at 1 p.m. Eastern time. So it's during market hours. So it's live during market hours. We look at the market. We look for case study considerations. And we have a live Q&A at the end. We have a tremendous community. They ask great questions. They have good interaction together. So if you're looking to find a community where you can share comments with like-minded people, join us for TradeFinder. You can sign up on the link. And once again, it is free. 2 weeks ago, we gave out MARA, and that was a great one. Some of you noted that you had a really good result from that. And this week was Amazon. And we're there. We're at our target right now. So as soon as we finish this recording, we'll be closing that out on TradeFinder within the Hub platform. Great social media aspect to the Hub platform as well. I invite you to look around there. So you can see this big move in Amazon. It's exactly where we said it's go. I drew the red line right here at the bottom of this Wave 5 tack box, and that's where we are. So, 2 of the last 3 weeks, we've had home run trades as our case study considerations in TradeFinder. So please join us next week. Other stocks of interest that you all ask about that I wanted to go through and show you. BABA, you ask about. And this goes to the whole China thing. Right? We had David Tepper that came out and buy all things China. And then President-elect Trump was elected, and it was like, oh, maybe not so fast on the whole China thing. And we moved back to the downside here, and have just been kind of hovering around this wave 4. Notice where that wave 4 is. It's at 78%. That means that's been violated because it passed that 78.6% level or is awfully close to it. But Elliott's words were, if you got to 70% on the wave 4, he felt like it's a likelihood that that's going to be a disqualified pattern. Once again, noting, though, that 78.6 is a fib level, so it still labels it in the algorithm. But if he were here, he'd say, I don't think that wave 5 pattern is going to play out. He thinks this will likely relabel into something probably more range bound from here. So if you're looking at it and you're really aggressive, we've had an awfully big move down. And at this time of the year, you would think with the retail things moving, we just showed Amazon that perhaps we can get a bid in a stock like Alibaba. So if you were looking for something in that sector, I think maybe this would be a good one to try. It would be a pretty good risk to reward trade because you can see where we are with the support resistance right through here at 85. So if you tried to go long here, your stop would be at 85. You break down below 85, you get out. So not too much risk here for potential reward if we could get a Alibaba as we get into expectations in the next earnings season, et cetera. So I think you're on to potentially good one there. Disney, we haven't looked at it in a while. It's been in the news. Their streaming service is doing much better than expected, hanging in there pretty well. I had some family members that actually went to Disney World last week, and the lines were very long. So Disney's come back. Bob Iger, he's got it going again. I mean, that guy's magic, pun intended, for Disney World. And the stock Disney itself, we had this big gap up, which concerns me a little bit, but we've been able to consolidate pretty nicely that move. We're going sideways here. You have to wonder if we're not running out of a little bit of steam here. You could make a case for Disney to go higher if we could break that wave 3. I'd have a hard time going long Disney right now. But if we broke above this wave 3 high, perhaps that wave 3 has a little bit more to run. But until it can do that, I would be a little more concerned with maybe some backing and filling here, perhaps even coming back down to test this area around 110 where we had the gap up. That tends to be what happens a lot after you have these big, strong moves to the upside there. But yeah, good one to ask about Disney. Intel, we've been talking about a lot of things. Talked about AMD last week, and Intel can't get out of its own way. Now they're talking about breaking it up. They're talking about breaking up the production from the other aspects of it because production is so difficult. You've heard Elon Musk talking about the challenges of production. So maybe that could put a bit under Intel, but they got to do something. The issue here is that we are kind of back below that 10-day moving average here with a little bit of room to the downside. So a touch oversold here on Intel. One thing I wanted to show you, which is pretty interesting about the chart of Intel, is we have this upper boundary here. This is what our AI does in the time strategy. It factors in the likelihood that a stock's going to stay in a trading range. So there was the upper and lower boundaries. That's what it shows you. So that's what we use in the time strategy at evotrader.com. So we came down to the lower end, and you can see we bounced up to the upper end, and now we're right back. Here we are, 6 months later, 5 months later, right smack in the middle of that trading range. So some sort of a butterfly sideways strategy, counter spread, etc., would have worked out amazingly well on Intel. But as far as the stock itself, right now it's a tiny bit oversold, but they're going to have to do something, and perhaps the breakup would be what would allow there to be some more momentum back into Intel. You guys ask about DJT for obvious reasons with the election, but note it's also in a trading range here. Now, this one gave a very low score for the boundary range here. So when you see a real low score, the data scientists that create all the AI stuff for the Hub platform have told us that you can fade a low score. So when you see these boundary ranges, and Intel was likely to stay in it, but when you see DJT, a stock that has a very low rating, that means it's likely to break out of that boundary. So we're testing the upper end of the boundary, and if we can break out above it, then perhaps there's more to the upside to go on DJT. But when you see the fact that it's in a sideways pattern, even though you can fade it with a low AI score, it's not like you're going to take off and run. So we wouldn't be looking for this kind of a move again. Just to be clear, a break above the boundary could give you just a little bit more to the upside, but it doesn't mean a substantial move higher. So that gives you a lot of indication of how the technical analysis works over at evotrader.com. As always, thank you so much for watching. Hope you have a great weekend and look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.